first guest asks the question, why? Why isn't our money better than this in the 21st century? Joining us now to discuss is Lyn Alden. Lyn Alden Investment Strategy, founder and author of Broken Money: Why Our Financial System is Failing Us and How We Can Make It Better. It's none other than Lyn Alden. Welcome, Lyn.
Happy to be here. Thanks for having me.
Glad having you. So we'll get into your book in just a second, but we just had some inflation data come out. Personal Consumption Expenditures Index, excluding food and energy prices, rose 0.2% in October. It seems like inflation's coming in now. That's the core PCE, et cetera. Everything's coming in a little bit lower than expected, which might indicate inflation is under control or getting under control. What's your thought?
So overall, we've had a kind of reduction in some of the more energy-intensive industries around the world over the past 12 months or so. Basically, if you look at purchasing managers indices or just overall kind of measures of economic activity, a lot of them have decelerated, whether it's China, whether it's Europe, and even in North America. But there's been a divergence. So some of the more service-oriented areas or less interest rate-sensitive areas have done really well, while some of those other areas that are either more capital intensive or more interest rate sensitive, the Fed's tightening has kind of pushed those down pretty significantly. So we are seeing this ongoing period of disinflation. I think the concern, though, so many people are focused on, can we get back down to 2%? I think the bigger question to ask is, okay, so we get back down to 2%, and then if we ease on that, and we have another economic reacceleration cycle as we tend to do every few years, what stops that inflation from returning? And so I still think we're in a more cyclical inflationary period, like the overall kind of higher highs and higher lows. Like basically the 2020s are likely to have kind of just an overall structurally higher level of background inflation, but that's still a very wide band. And clearly right now we are still in a disinflationary cycle for the time being, just partially due to the tightness of monetary policy.
Now, your book is all about broken money and a broken financial system. If we look at the macro situation from where we're sitting today, how is money broken and how do we move forward?
So I think it's broken, and you mentioned it's a downer, but actually I view it as optimistic in the sense that if we identify a problem, it makes it easier to fix the problem. So I still have a hopeful view of the future of money, even though the present situation's rough. So the way it's broken now is that we've reached basically a local maximum in basically our technological approach of money, which is basically to say that ever since we entered the telecommunications era, so ever since we deployed the telegraph in the second half of the 1800s and connected the world in terms of communication, we created this really big speed gap between transaction speeds, which were now almost instantaneous, and settlement speeds, which back then were gold. And the process of shipping around and verifying gold is hard, and so basically that gap result in larger and larger levels of abstraction. So we have base money, and then we kind of have all these layers on top of it, which allows us to just build more and more credit, more and more claims on it, and eventually becomes so untenable that if that ever crashes even a small percentage, the system basically blows up. And so they just disregarded gold. Gold was too slow to kind of keep up in this telecommunication era, even when the other system was having problems. And so now we're in an environment where there's 160 plus different currencies in the world. Those of us in the United States or Europe or Japan or Canada, we have some of the better currencies in the world. Our currencies go down pretty slowly in value. Whereas if you're in the long tail of dozens and dozens of other smaller currencies in the world, you're more likely to experience double-digit inflation on a recurring, regular basis. And there's dozens of countries in the world that have experienced hyperinflation in our lifetimes, let alone if you go back further than that. And so because there's been that kind of that speed gap, countries have gotten very good at basically controlling their financial borders. That money can only go out in a couple ways. It can go out through ports of entry, it can go in through ports of entry, but that's obviously very limited. It can go in and out through wire transfers, but they're fully controlled by government regulations. So they can decide, if I send dollars to say a freelancer in Egypt, the the Egyptian government and banking system determines how easy it is for that Egyptian to get a dollar account, whether or not my dollars that go to them get translated into Egyptian pounds or get to hit them with dollars. And so they get kind of stuck in these silos, which then allows kind of the people that are closer to the money source to continue siphoning away people's savings, wages, and basically putting everyone on kind of an economic treadmill
Well,
where they're kind of constantly trying to keep up. And so what's kind of interesting now is that going forward, some of these technologies get around those borders and kind of make money more competitive again. Basically, gives people around all these different silos access to whatever global money they want. It might be Bitcoin. In some cases, it might be dollar stable coins, but it gives people kind of more options, to kind of let the market play out.
except when we step back a little bit here and we look at what currencies do and why currencies are in demand and what their function is, it is of course that thing that, well, currencies are a unit of accounting. It's a medium of transaction. It's a store of wealth. Store of wealth seems to be something that crypto has done well, but unit of accounts and medium of transaction not so well. Part of that, of course, is that these countries and their currencies that you talk about, they need the control over their currency supply because they are also the largest issuers of debt. A country such as Egypt issues debt, and they issue debt. Sometimes it's based on dollars, sometimes it's based in the situation, let's say with Egypt, it'd be Egyptian pounds, and they play this balancing act between issuing currencies and trying to keep inflation under control so that their economy doesn't spiral into chaos. And that sometimes they succeed, lots of times they don't. But what would drive demand for cryptocurrency when you have the competition from fiat currencies that are in such demand by governments as the issuers of debt?
Yeah, so that is the challenge. I think the answer is that you're not going to have a lot of medium exchange usage until basically the cash savings that people have in these assets are 10 times bigger. I think the store of value in most cases comes first. But backing up, I think another way of looking at it is that people go into these when they have a specific need. And so when you look at payments, I would say fewer people in the world have a payments problem than a savings problem. There's still a lot of people with payments problems, but payments so far, for most of us in the West, for example, in developed countries, I don't go through my day and thinking I'm blocked from making payments, right? In edge cases where people are blocked from making payments, that's where Bitcoin becomes useful. The fact that that optionality is there for them should they get deplatformed or censored in some way. So, for example, one of the first ever uses of Bitcoin was WikiLeaks. When they were kind of financially deplatformed, they could turn to Bitcoin donations as a backup source. If you're in one of these countries that has authoritarian aspects to it, there are sometimes protesters that will get their bank accounts frozen and they'll say, okay, we'll take Bitcoin donations. And obviously there's more frictions because they're in a currency monopoly. There's legal tender laws. There are smaller
Right, but
currency in a very.
I apologize, but these are all still fringe cases, right? In any given country, how many people are out there protesting and are dissidents? How many of them are WikiLeaks? In general, people are just trying to get by the day-to-day aspects of their lives. They're trying to eat. And we are finding that financial technology is catching up in centralized banking. We're finding that that there are apps that make it easier right now using a centralized database to conduct transactions. For most people who aren't dissidents, who are just trying to get by, maybe they might not have access to banking just yet, but it's getting easier and easier and in different forms for them to transact. So where does the idea that, hey, you know what, my debts to the government in taxes or bills and such things are in, no vowel stands currency, and so I need to use the no vowel stand dinar versus, oh, now I'm going to use Solana. I'm going to use, altcoin light, whatever you're calling it, to transact. No, I'm going to use the no vowel stand dinar because that's where all my bills are. That's what I need the money for, and it's getting easier for me to use it on my apps. So I'm still trying to grasp: have we succeeded? Has crypto succeeded in addressing those concerns the way it was promised 15 years ago?
Well, so I think even 10, 20 years from now, the percentage of people making payments directly with blockchain will be low. I think there'll still be people using a lot of these overlay layers, whether it's Cash App, whether it's any other kind of centralized service, often because they're convenient. I think where the payments aspect becomes useful is when you're blocked in some way, which to your point is not necessarily a big percentage of people on the surface. Basically, there are about 3 billion people in the world that live in authoritarian or semi-authoritarian regimes. So it's actually a pretty big total addressable market, but the majority of them are not actively trying to buy things that they're blocked from or actively trying to protest or things like that. So the actual percentage to kind of run into enough frictions to search out solutions is still fairly small, but I think that's disproportionately important to give them the tools that they need because that's how change happens. Basically, it's not the percentage, just the magnitude they can have. But I think more importantly, the way to look at this is basically these 160 currencies are basically like arcade tokens. They're other than the dollar and a few others, they're mostly just relevant in their little borders. Most of them have hyperinflated within a say 50-year period, or at least the weakest ones have dozens of them. Other ones just have structurally high average inflation or structurally background problems of financial censorship. And the way to approach these is, look, if you have to pay your taxes in those currencies, you pay your taxes in those currencies. If you can kind of use that system, but then you cash out of that system when you don't need it anymore. And when you want to have something better, when you want to have Bitcoin, when you want to have dollar stable coins, when you want to have something else that is more useful to you, more better for your long-term savings than your local currency. And so I think that for most people around the world, the store value problem is a bigger and more obvious and more immediate one to solve because in some sense everybody has a store of value problem. In some countries we stash wealth into like illiquid real estate because we don't know what else to do with it. Or most countries don't have the S&P 500. They have weaker stock markets, so they're trying to figure out where to put their money if not in fiat currencies. So for a lot of people, that store of value aspect is kind of the more obvious one. And then the payment one is relevant because if you personally run into a problem of making payments, which is most people I think are not going to run into, but the people that do, they now have that option, especially if they're already holding some of their savings in these more, kind of self-custodial or protected assets. They can now, from that stack, from that optionality they've saved up, from that store of value, they can make payments if they need to from what otherwise was blocked. And so I think that's the order of events here is basically that there's this optional payment medium that's not the most, usually it's not the most efficient, but it's the most unstoppable, but only a percentage need it. But then more and more people identify it as a really useful savings technology that should they need to, it then offers kind of certain payment services that you can't really get with some of these centralized systems at the cost of sometimes being less efficient. But if you're blocked from some of the more centralized things, that's when you're willing to turn to, some of these other solutions.
Lyn, I wish we had more time, but we do got to wrap it there. Just before we go, I know you don't do short-term Bitcoin predictions, but if we look at the next 2 years, where do you see the price of Bitcoin heading?
So Bitcoin is highly correlated with global liquidity. So if you look at say global broad money supply in dollar denominated terms, and I think that over a 2-year period, both Bitcoin price and global liquidity are probably headed, I would say notably higher. No clue on the next 6 weeks, 3 months. I don't really know, but I do think over a 2-year period, I'm very constructive on Bitcoin price. I would guess back near prior all-time highs. Hopefully higher than those highs would be my kind of baseline.
Lyn, thank you so much for joining us this morning and congratulations on the launch of your book.
Thank you for having me.
That was Lyn Alden, Investment Strategy founder and author of Broken Money, Why Our Financial System is Failing Us and How We Can Make It Better, Lyn Alden.